Okay, just redoing the video. Sorry, there seems to be a technical malfunction there with the recording, lost sound. There was nothing urgent, nothing new I'm doing, because for reasons I'm about to explain. The market itself on Friday did push higher, but on lower volume. And it's again a tale of two charts, because if you look at the S&P 500, that's looking very strong, pushed out again, but again, look at the drop-off in volume there. So it did break out to an all-time high, so you can't take that away from it, and this is why this is still a piggish market, which effectively the system puts you in, the long-term system we looked at puts you in cash. But something like that I still don't trust, because of the reasons that we explained. This chart is not saying bullish yet. This is a breakup on low volume, not convincing, but also the bigger picture is this, because if you look at the NASDAQ, which is another important index, that chart is nowhere near as healthy. This is still in a downtrend, downward peaks. So what's going on? How come we've got this what is effectively a non-confirmation of the indexes, which is why I look at the NYA, because that's a composite of everything. And as you can see, it did push up high, did break out a little bit there, but it's not exactly an attractive chart. But let's look at what else is going on. Here's the bonds. Bonds are a safe haven for big pension funds, investors around the world. It's considered a more sophisticated market, and the bond market has just gone nuts. This is a panic verge. This is like a flight to safety, and I think it's out of Europe. Gold is the same. So are utilities. Let's look at utilities. There's practically a panic to safety. So what's going on? We've got a deceptive picture here, because the market's got to a new high, but we've also got a flight to safety. Look at I want you to look at Deutsche Bank for a second, and see what's happened here. Deutsche Bank is a big time bomb waiting to go off. It's sitting on $47 trillion worth of derivatives. Yes, that's trillion, not million, not billion, trillion. It's literally a nuclear bomb. And what happened, of course, everything went down after Brexit there, but this one just kept on going down when other things kept recovering on massive volume. The insiders are selling Deutsche Bank like crazy, while the rest of the market went up. I think this could be at least one of the things, that and the Italian banking system that I've described. This could be ground zero of what could be a coming earthquake. So we've got to watch that carefully, and that's why I'm not doing anything new right now. Everything else that was open is looking very good. There's HII doing a great job hanging in there. Just keep raising any gain locks, lock in profits. Same for RGLD. Obviously, the ones that weren't working out, cut their stops early. Small losses, fine, but then you ride the winners and just look at these, and that's the name of the game. You win some, you lose some, but the winners are going to make you a lot more than the losers. Let's also look at FXY. FXY looks like it's pushed into a new box, even above the 95 level is the bottom of the new box, which you can understand that's another flight to safety, is the Japanese yen. So let's keep an eye on what happens next, because it's July is also traditionally probably the worst month. The people think it's October. I think July is actually, in my research, the worst month there is in terms of volatility and action. So let's keep an eye on what happens next. We're still in a pig market, don't forget. Recommendations are doing well. No new things I'm doing at this time. So, but the time could be rapidly approaching when the bear trade is looking for the bear market trade is looking more and more attractive. But definitely a deceptive picture right now, and so let's see what happens.